The US dollar is mostly lower before the US CPI data, which is expected to show a 0.3% for both the headline and the core measure. The year-on-year data is supposed to show the headline number move up to 2.6% from 2.4%, and the core measure heading up to 3% from 2.8%. The U.S. stocks are higher ahead of that data. Yields are mixed, with the lower end higher by about 2 basis points and the longer end lower by about 1.5 basis points. I'll look at the three major currency pairs to kickstart the trading day ahead of those releases. I'll look about the risk, the biases, and the targets for each of the euro, the dollar versus yen, and sterling versus US dollar. So let's get started. Looking at the euro versus US dollar, I'll focus on the hourly chart. And what we see on the hourly chart is that the high prices, the most recent high prices, have come up to test this blue line. This blue line represents the 100-hour moving average. And although the price last week did move above that moving average here and here, the next time the price came up to that level, found willing sellers in trading on Friday. The price came up to that level, found willing sellers. In trading today, the price came up to that level, found willing sellers. So there is a ceiling against that 100-hour moving average. It's going to take a move above that level at 1.16927 to increase the bullish bias for this currency pair, and have traders then looking toward the 200-hour moving average. The falling 200-hour moving average is up near 1.17207. That's also approaching these low prices right through here, which I have outlined as a red line. We also came up to that level when it tested the 100-hour moving average in trading on Friday. So that level at 117.16 to 117.207 would also need to be broken to increase the bullish bias. On the downside, we have this swing area between 116.63 and 116.91. We fell below it in trading yesterday a number of different times and in early trading here today, but the momentum cannot be sustained and rotated back to the upside. Getting back below the 116.63 level would be important. It would and stable at that level would be important, and have traders then looking toward this swing area down here between 116.14 and 116.21, defined by a number of different swing highs coming through here. We did move above it here. We then reestablished resistance here, and here before breaking to the upside right here. So this level between 116.14 and 116.29 would be a key level. Ultimately, if the price is going to go lower, we need to get down to the 38.2% retracement of the move up from the May low to the high price that we saw in the month of June. That level comes in at 115.35. So that's the directional. But on the top side, get above the 200. On the downside, get below the 116.63 and stay below that level. Let's take a look at the dollar versus yen next. I'll focus on the 4-hour chart for this currency pair. And looking at the 4-hour chart, we're moving, it looks like to new highs. And looking toward the June high. That June high came in at 148.019. Above that is the May high, which came in at 148, like 60 or 70, between 58 and 73. As a matter of fact, that swing, that is also this swing area down through here, which had a number of different swing lows and swing highs around that area. So this high right here did stall within that area, and that's going to be the next target on the break of the if the price is able to get above the June high. On the downside, the price yesterday came down to test the 38.2% retracement, actually based against that level right through here, and that gave the buyers the go-ahead to push to the upside. You can see it more closely if I go to the hourly chart and move back here. This is the 38.2% retracement, and you see how that price based against that level before moving to the upside. That increases the level's importance. Also important is the rising 100-hour moving average. So keep in mind the 147.13 level as a target on the downside, not further selling pressure. On below that, we have the 100-hour moving average. Absent that, and we go higher, and we get above the June high. It opens the door for that May high outlined off the 4-hour chart. Finally, let's take a look at the sterling versus US dollar. I'll focus on the hourly chart, and the low price that we saw in trading earlier today came right down to the low prices that we saw back here around the 14 level, 136.14 level. We had two lows right here. We broke below those lows right here. It should open the door to the downside. It didn't. We saw rotation back to the upside, reestablishing support right near the 14 level here, and then we came back down, traded above and below this level before, again, breaking to the downside into a swing area down here before failing and moving back to the upside there. So the 14 level has some history, and so holding that level was the low price came in at 17. Since then, the price has moved, rotated back up to the upside. What is going to be my key barometer for today is a 50% retracement. If the price is able to get above the 50% retracement, 1.34638, I would expect further upside momentum. If it stays below that level, then the downside remains favored with that 134.14 level as the next key target on the downside. On the top side, break above the 50% retracing, break above the 75 level, and we start to look for other levels, including the falling 100-hour moving average. Maybe this swing area up here between 135.05 and 135.14. So there you have a look at three of the major currency pairs. Ahead of that key CPI data coming out at 8:30 a.m. We also have Canadian CPI coming out at that time, but the focus will be on that U.S. data. So be aware, be prepared. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.